Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. Hopefully, you've all had a good day. The cryptocurrency market is currently deep in the green, and we're going to be putting some perspectives on things in this video, giving some broader context to the cryptocurrency market, what we're seeing today, why we're seeing it. We had the CPI print for the US. We covered this in an earlier video. Now, I'd said if you get 8.1 or 8 or even something like 7.9, that's bad. In my opinion, the print that we got at 7.7, which came out significantly lower than consensus and the TEF forecast, is still bad. And I'm going to be showing you why that is the case in this video. This all fuels every time we get a lower print, if it's marginally, if it's a little bit more significant like the one that we've seen, it fuels this kind of pivot narrative. And it really fuels a pivot narrative when people don't actually understand what a pivot is. A pivot is an undoing of interest rates, not a pausing or not a slower continuation in the pursuit of upping interest rates. It's a reversal. That's when we get bullish. Now is not the time to be bullish on the markets, ladies and gentlemen. I've never seen recency bias or sort of recency syndrome like I have in the markets. Yesterday was horrific, doom and gloom. Today, there's a lot of bulls almost claiming victory, and that's really why I wanted to put a video out and also take a look at some past legs of capitulation and show you that we're really not doing anything different. And you've got to remember, guys, that markets do not, have not, and never will go down in just a continuous straight line forever. They're not just one directional, and you're always going to get pushback. And internally, when you're looking at price, there's a lot of things going on. You're just looking at the price of something moving up and down. But there's a backstory to it. You know, when we have these capitulation events, one reason, and we can look at any real capitulation and sort of, gauge this. You can see this is unusual price action, isn't it? Let's say a 14% here. Even in terms of a day, I mean, you look at this price action, which was 12, 13%. These are daily candles, by the way, guys. After any sort of capitulation event. I mean, look at this one as a perfect example. You get this big kind of wick up of 15%. Why is that, given that the direction has already sort of been taken? This one is only 14%. Well, it has a lot to do with internal markets and the fact that we end up with short squeezes. So people that have missed the move, FOMO doesn't just work in terms of investing and buying, guys. It also works on the side of trading. In fact, I'd say it's almost more present in trading. I feel it all the time, every day pretty much when I trade, because we're constantly looking at setups, decide whether we take them, whether we don't, if we've missed out, if we haven't. We didn't perfectly nail, even though we've been calling for this, the likes of Solana, those shorts we got out a lot earlier than we should have. But the thing is people chase into this sort of price action. They see these big red candles and they essentially get excited. And what they'll do is they'll get into this mindset of, okay, well, I didn't short yesterday, but it's gone down some more when I woke up this morning, so that means I can short now, and it's likely going to go down again. What happens is you end up with a mass of shorts right when sell pressure is running out, and then those shorts get basically either liquidated for idiots that use anything. If you're using anything over 10x leverage, guys, I don't really know. I don't want to say I don't know how you call yourself a trader, because that's totally unfair. That there are some traders out there, I'm sure, that's how they make their living, is with a lot of high leverage. But the normal retail trader should not be going over anything above 5x leverage. 5x is even too much, in my opinion, in these kind of markets. But you end up with people getting liquidated, and it causes the price to go the other way. That's largely also been fueled. We're painting this picture here because when you're looking at price action, there's a whole backstory to it. And there's reasons why things happen. That and this rally was fueled by, of course, if we take a look at the stock market, if we take a look at the S&P, even the FTSE, things like gold, and we'll do quite a bit of a topic on. There's a trick, guys. If your TA is wrong, just move the lines. We'll do a little bit of talking about the Dixie as well. But this kind of rally has largely been fueled by, of course, the CPI print that we had. This goes into the sort of macro narrative and obviously the kind of print that we get. And there's also inflationary stats coming out tomorrow, which if they come out bad, and I think there's non-farm payroll tomorrow, or that, in fact, non-farm payroll, I think, was last Friday. that's, potentially going to have a slap in the face in the other direction. So we did get the print. The print was lower. It was 7.7. Again, the consensus was a lot higher. This does show that inflation's coming down, and it's very obvious to see. We even covered it in the earlier video that, inflation is likely going to come down. If we look at oil, for example, if we look at wheat, there's a huge basket here of commodities that make up the CPI print, and we can see just what's changed and where. There are still, actually, within this, inflationary pressures growing. I think food actually came up, but there are a number of others that came down significantly that sort of tilted this to be a lower CPI print. But 7.7% is not good, and it's not where the Fed want to be. And until the Fed get there, they're very committed to continuing, and that really leads me into I should probably move this KuCoin tab to Fed. Leads me into this clip, again reiterating what Jerome Powell said after doing the last 75 basis point rate hike. They're not playing around, guys. Unfortunately, there's a little bit more pain, in my opinion, to come before we get those brighter days. Remember, crypto isn't going anywhere, and you're very lucky to be here at this moment in time. So I'm going to play this, and then we will do a little bit of talking about it. Okay, bear with me 1 second, guys. Let me just change the properties here so that you can actually hear it.
My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we're continuing the process of
Okay, and then he goes to say that he's taking off. He's going to continue to reduce the balance sheet. That's not a pivot. And he also said we've got a target of inflation at 2%. 7.7, work out how long it's going to take you to get to 2%, and work out how long interest rates and monetary policy is going to be where it is until they get to that sort of a stance. And I don't want to have to keep going into the whole kind of concept of liquidity. And, the fact that this is now, the debt market has been refinanced to a far, far higher payment threshold, which means that money has to come from somewhere. That's going to continue to be the case if they just left interest rates where they were, and will actually get worse. And we've got other data that can very much move these markets. So this rally in the crypto space has been fueled, of course, by this. It's basically has quite a lot to do with a short squeeze. Where am I wrong, and where was this, where can I say, okay, well, we were wrong to see this as nothing more of as a relief rally? Well, that's if you reclaim, the origin of the move, essentially, which is here. Or you could even say the origin of the major spill. If you start coming up and reclaiming these levels, okay, then you can say, okay, well, there's something more behind this other than it just being a relief rally that's fueled by things going on externally. Also, we pointed out this morning that it is still very much a dollar story, ladies and gentlemen, and it is. There are huge similarities, again, fueling this rally with what we've seen. The problem that you have, and we will do a bit of TI on the dollar, is that if things turn their head again, I still believe that, the NASDAQ and the S&P are in a kind of 2008, or going into a 2008 style period. I don't think it looks that dissimilar. You have plenty of rallies in bear markets, and I don't think we've had that big capitulation yet. We've seen it in the crypto space, but I don't think we've seen it elsewhere. I think that's still to come. Crypto will be held at a hostage of that. So I don't think people should be getting too excited here. If you can trade it and make some money on it, great. Trading from where the market currently is right now, kind of feels like playing in traffic with a very low chance of not getting hit by a car. But we will look to get some trades on as things move forward and get that decisiveness. Also, and this is something we spoke about, going from inflation to deflation. Why is inflation coming down? It's because they're being restrictive, they're demand destructing by taking liquidity off the table and kind of causing this crunch, whether that be people have to pay more on their mortgage or for their debt, so on and so forth. We also know personal saving rates are at a pretty low point. Inversely correlated credit ratings are going, or not credit ratings, credit rates are going through the roof. You know, it's a very interesting time, and I don't think there's any reason to be excited. Get excited once you've retraced this down move, because that's real strength. Don't get excited halfway through. And like we showed you at the start of the video, very, very common, right? Very common to have these kind of moves after some sort of, I don't like using the word capitulation. Look, that was a 16% one. Ball 16%, and then it does this and goes on to put in lows. This is what I think is coming. You just got to put in a low. Look at these. We've not seen this story before. Is this time different? It absolutely could be, and potentially I'm wrong. But my bias, just because I say I think something's going to happen, no guarantee at all. You know, I've been trading these markets for long enough to know that that's the case. But this is the bias. This is the side of the market we're on. You know, we still see lower prices to be had. And I think that there's going to be a lot of contagion coming over the next couple of weeks, certainly going into Christmas and going into a deepening recession. So that's a rather cheery video. I didn't mean for it to be at all depressing. It's just really wanted to put some context to the situation. I don't want people to get caught out here, because retail very much, and I'm retail myself, is very good at buying the tops and selling the bottoms. And I don't want that to be the case. And hopefully we can see you on the right side of things. You know, the real question is, you know, once this loses its momentum, that reality kind of comes back around. But we will see what takes place. And just remember what Jerome Powell is saying here, ladies and gentlemen. They're going to, the pivot narrative to me is a rather stupid one. It's going to be crucial to actually getting the pivot right. But what I mean by the pivot narrative is the one that's currently floating, because there's nothing to suggest that is the case currently. And that's all I've got for you in this video, guys. If you've enjoyed the content, like is always appreciated. So as a comment, I'm going to love and leave you on that note. See you in the next YouTube video, guys.